Welcome to another Trading Cycles video. It's week 6, 2024. My name is Urmas and I'm bringing you another weekly overview of what happened last week and what's going to happen possibly next week. So let's speak a bit ahead as well. And I still need to remind you that this information is provided only for educational purposes, and we would recommend to consult with your financial advisor or do your own due diligence to obviously make your own decisions there. So, and also don't trade the prediction, always trade the price. All right. Now, the week has been very interesting, and obviously we saw another top on S&P 500, which we will cover soon. But obviously not all of the stocks are moving up, and as you might have discovered yourself, sometimes the stocks that you have just sold are heading up, and the stocks that you were about to buy are heading up. But all your rest of your portfolio is moving to the downside. That's quite common thing that might happen, and obviously you need to use stop losses there as well. Obviously, if you are trading the markets, at least, depending on the strategy, obviously, So that's obviously not a recommendation, but that's a common practice. Now, if you look at the earnings, where most of the earning growth has been obviously coming was Magnificent 7, and the rest of the market has been quite low. So, and also overall economy seems to be quite resilient, but there are some cracks already developing. So it's not all sunshine everywhere. So lots of companies have been reducing their staff as well. So unfortunately, some of them are like Twitch, one of the biggest one, who has reduced 35% of its workforce. Also Hasbro, Spotify, Levi Strauss, Xerox, then Wayfair, eBay, for example, and even financial institutions like Charles Schwab, BlackRock, Citigroup, So it's not looking good at all, or at least they are looking a bit cautiously ahead. Now, if we look at the earning growth, then yes, again, I need to point out that most of the growth is coming from that Magnificent 7. So that's something to bear in mind. And one of the strongest ones have been so far Meta and NVDA, indeed. Now, overall, 46% of the companies in S&P 500 have now reported actual results for Q4 2023. And out of those companies, 72% have reported actual EPS above estimates. So the surprise has been fairly good, but it is still below 5-year and 10-year averages. So obviously we need to bear in mind that those averages don't take into account only 46% of the companies. It takes into account the whole earnings season results. So we can't really compare apples with apples at the moment, but that gives us some sort of an idea. Now, new week will bring us another wave of earnings. There are more than, I think, 100 companies reporting out of S&P 500 next week. So that's going to be quite a lot of earnings coming up, and obviously we will have better idea of the statistics as well after that. Now, from the surprise point of view, the most surprises have come from energy, healthcare, and technology sector. And maybe the worst ones have been communication services and financials so far, But still, the growth has been better on communication services side, So this is one of the sectors that will be in favor possibly from summer on or end of May, when Jupiter changes sign to Gemini, which is quite important for those kind of stocks as well, So we will have a closer look into those stocks that might benefit from that transit as well. Also, what's interesting to point out is that Google is about to rebrand their Bard AI to Gemini. Yeah, so that's also quite interesting move. But they are rebranding it now, making it more accessible, and I think they hope that the new name will obviously bring more usability as well than Bard did. Now, if you look at division on the market between, let's say, Nasdaq 100 and Russell 2000, then forward EPS is quite different. Yeah, so Nasdaq is pointing to the upside and Russell 2000 to the downside. Yeah, not so great. Although BlackRock has upgraded US stock to overweight, saying that AI-driven rally could broaden in the next 6 to 12 months, which we do believe. Yeah, so the signs are there, and obviously there could be another rally following this one, although we need to follow the cyclical tendencies as well. So at the moment it's a bit mixed there. Yeah. And now the stock market is up approximately 19% over the past 3 months. Over the past 100 years, this has happened 17 times. And out of 17 times 16, the market was up 1 year later as well, on an average of 30% plus. So that's also a sign that we might see higher prices by the end of the year still than it was in the beginning of the year. Yeah. Now, government debt in US is kind of weighing down their expenditure there, yeah, because obviously they need to service their debt, paying interest rates, and this is quite heavily grown in the past 2 years, yeah, as we see here, quite exponential growth in that sense. Now, same exponential growth was going on in China's property market, which now is collapsing, and yeah, that's not so good. And obviously we do expect more news coming out of China's property market as well, which might go even worse. Now let's have a look here. Last week, what we did see, we see quite a lot of resilience and optimism, and also GDP growth was very positive, 3.3%. Now, Fed did point out that it might be premature to expect rate cuts as early as March. So that has been now postponed even further, which kind of makes sense at the moment, as if they look at the history of things, then in the 70s, when we had a similar inflation situation, the initial curve did follow with the second wave and also third wave, because the interest cuts were started too soon. Now we shall see how it's going to play out this time, although history tends to repeat. Those cycles are quite persistent, and yeah, obviously it depends on so many things, but at the moment, at least what Fed can do, they are trying to avoid making same mistakes, as it seems to me at the moment. Yeah. All right. Now there are lots of earnings coming up as well, so there will be more earnings coming this week, but last week we had mixed results as well from, for example, Microsoft and AMD, very strong results, and Alphabet had some challenges there with the ad revenue, and Apple reported slowing iPhone sales in China, so that's obviously what affected their prices as well and results. But yeah, market did recover very strongly by Friday. Now, if you look at the actual price action for last week on an hourly chart, then we see that it went quite according to the prediction. So we did expect Monday to be a very, very strong day, then Tuesday to be a flat day, more or less. Wednesday and Thursday we thought might be quite low days, and that's kind of happened. And then Friday we saw quite a big rally to the upside again. All right, now 50-day moving average is moving now lower, as we have predicted that it might happen. Obviously, it doesn't tend to be in those red and green areas for too long. Now we are cyclically in correction period as well, so that kind of makes sense as well. Yeah, was predicted, although 200-day moving average is not moving lower so far. Yeah, so that holds quite steadily. VIX is in the same level still. No changes in there so far. Technical view of the market is very positive still. Yeah, there are no signs from S&P 500 point of view that would point to the downside just yet. Now 17-week cycle is pointing to the downside, yes, and we do expect at least the broad market to correct even up until the end of Feb, or maybe even further. So depending, there might be some things to bear in mind, which we will go through now in a moment. So we can see from Russel and price action that it started correcting in the end of December, and it's been moving to the downside, and we do expect it to correct even further. Sector performance, consumer cyclical, consumer defensive, both were very strong, and the weakest were real estate and energy during the week. And if you look at the heat map, so then we will see that it was very mixed as well, and even the big ones had mixed results. Yeah, not all of them were green anymore. Now insiders have started selling again. Yeah, so there is a pressure to the sale side. So yeah, we might see more of that coming up as well. Extreme greed has turned to greed, so it's been lowered as well. Seasonally, it's still strong to the upside. Yeah, so that's holding up very well. Now, if you look at last week on this statistics side, then we do see that we had very strong days here. Yeah, and we are in that 12-year seasonal upside pattern as well, very strong upside area. So that's something to keep in mind. But the end of the month shows quite a lot of weakness here. Yeah, so we shall see how it's going to play out then. Yeah, possibly after 19th we should see something happening there. Yeah. Now astrologically, it's gonna be packed week. There's quite a lot going on. First half of the week should be quite positive. Second half might not be so good. Yeah, we got the new moon coming up, and there are some tensions as well. So something to keep in mind. Now, if you look at last week's aspects that we pointed out, we mentioned that Monday might be strong, Tuesday flat, Wednesday, Thursday negative days, and Friday a strong upside again. Yeah, so that went according to our prediction. Now, new week, we think that Monday will be quite neutral, Tuesday, Wednesday to the upside again, and Thursday, Friday to the downside. Yeah, so that's something to keep an eye on as well. All right, so what else? What to expect then? Obviously, there are some interesting earnings coming up, as I said. So Ford, PepsiCo, Disney, McDonald's, and Caterpillar, for example. So we will see how the consumer behavior is is on the market, what the automotive sector is doing, and also entertainment industry. Yeah, so that's something very interesting to follow as well. And there will be some inflation data coming up, not only in US but also in UK, for example. Yeah, so lots of data coming out, and yeah, these are the macro dates and times. Then what to expect next week as well. Yeah, okay. Now the company that we have been following cyclically, WTW, Willis Towers Watson. Yeah, we did expect that this is gonna strongly hold to the upside, and so it did. It did touch that forming resistance there, and basically cyclically, we did expect that it might happen, that it might be starting turning now. Yeah, but we shall see how it's gonna play out here at the moment. Yeah. All right, so let's move on to the actual charts now. Yeah, so let's take a look at the oil as well. So crude is kind of in this channel at the moment, so it didn't break through this resistance and it turned to the downside. There was quite important turning point on 29th on Monday, and that held very strongly. So the price did turn down again. Now gold is also in sort of a channel, yeah, moving to sideways at the moment. Nothing new there. Bitcoin is against a resistance at the moment. We do expect that the price might turn to the downside again. Yeah. Now, if we look at some bigger names here as well, let's take a look at those charts as well. So Apple, what's going on here then? Apple was against the resistance, and it did continue moving to the downside, yeah, as expected. Amazon did go up and away, yeah, because it did find support there a couple of weeks ago, and nothing stopped it going higher. Google did turn around, obviously after earnings, yeah, so that's something to keep an eye on now. Whether it's going to hold that support here or it's going to come even lower. Okay. Microsoft, I do expect that it might even go further up next week, but we shall see how it's going to play out. And NVDA, same story basically. Yeah, it's very strong at the moment. Now Tesla is not so strong as we did expect, so we do expect this price to go even lower. Yeah. So at the moment there are no good news for Tesla stock owners. And Netflix has or is forming a sort of a flag pattern here. Yeah, so it did burst up very strongly, and now it's been consolidating here, and there might be another leg coming up here at some point as well. Just to keep an eye on it. And yeah, that's about it, I think, for this week. Yeah, let's have a look at the turning points as well, as promised. So they are now ready on our charts here. So let's take S&P first. So S&P 500. And what to expect then in the near time. So the next turning point is going to be on Friday, the 9th, and then straight after on Monday, the 12th. Yeah. So that might be quite volatile period there. Okay. Now again, let's look at the oil. So I wanted to point out that this turning point that we had on the chart for 29th, that held very strongly. So the next one is coming up now on Thursday the 8th. Gold is moving to the upside at the moment. Next turning point is going to be on the 7th, Wednesday. And Bitcoin is basically has started moving to the downside after Friday's turning point. Let's see if it's gonna hold until Saturday the 10th when the next one is coming up. Yeah. So that is all from my side. Yeah. I'll wish you all a great week, great trading, and obviously please bear in mind, always trade the price, not the prediction. Yeah. And always do your own homework in regards. I'll thank you again. Please follow and like if you do enjoy our content, and obviously share it with others as well. That's very important to us and channel as well. So we will hope to grow with yourself. So thank you for that, and we'll meet again in a week's time. Have a great week.